right, next up, we have a Global Voices video on cities featuring, among other figures, Bogota's bicycle mayor.
As casas são pequenas, as famílias numerosas e não temos como seguir as recomendações da Organização Mundial de Saúde. É como se vivêssemos dois Brasis. Um Brasil que pode ter acesso ao home office, máscara e álcool gel, e outro Brasil que passa fome, que vive em cima do córrego e que falta água.
Traffic is a problem for the flow of travel. Public transport systems seem to be overwhelmed by high demand. The environment is heavily impacted by pollution, and there are health problems related to sedentary lifestyle and respiratory diseases that today are the major cause of death in Bogota. In this scenario, promoting the use of the bicycle becomes a powerful tool to facilitate the flow of mobility, improve public transport congestion, reduce the emission of polluting particles, and thus, together with the physical activity that cycling involves, improve the citizen's health.
The pandemic has also given us a deeper insight on how more vulnerable these communities are during these difficult times. Their only means of survival is taken away because of the restrictions on movements. In fact, many of them have said to us that they are more afraid of starvation and being evicted than of the virus itself.
O que é esses termos que são usados como home office, lockdown? A população não está entendendo e está achando que a doença é só para rico e, na verdade, está morrendo os pobres e os negros da favela.
The most vulnerable populations have been exposed to contagion during their long trips to work, since for them working at home is not an option due to the nature of their activities and in cases due to the lack of internet connection in their homes.
It is really time for us to be inclusive rather than exclusive in all our efforts and initiatives. Because, as we know, COVID-19 doesn't distinguish anyone according to classes.
To people who want to abandon their cities, I say that this new reality has brought us the unique opportunity to appropriate the public space that has always belonged to us, either by using its infrastructure to mobilize in a more sustainable and healthy way, or to enjoy areas that were previously restricted for citizen enjoyment. So my advice is, instead of leaving the cities, let's all take ownership of them in a responsible and productive way and see how our quality of life will improve.
Our next panel looks at how the changing global order will impact financial markets and the investment world. Our speakers are Ana Botin, Executive Chairman, Banco Santander; Ray Dalio, Co-Chairman and Co-Chief Investment Officer at Bridgewater Associates; and Ann Richards, Chief Executive Officer, Fidelity International. Our moderator for this panel, it is Erik Schatzker, my colleague and editor-at-large at Bloomberg Television. Erik, over to you.
Carol, thank you very much. I'd like to welcome my panelists, Ana Botin, Ray Dalio, and Richards. Good to see all three of you. Double checking that you can hear me. Let's jump right into it. Navigating the new order. As we all know, news of major progress on vaccine development has lifted our hopes, and it's certainly lifted financial markets, but we all know that the experience of the coronavirus will be hard to shake. Panelists, what do you see as the most lasting effects of the pandemic for years to come? Ana, why don't you start us off?
Sure. So I think we've all learned a lot on a personal basis, also in our professional lives. And I think this is going to really, result in permanent consumer and companies' behavior. How exactly that's going to happen is not easy to predict right now. I'd say, first of all, there is a much faster digital, adoption. Just to give you an example, in the month of October, and this was the case in Argentina and in the UK, 80% of all our sales of financial products were online. The average for the group was 50%. So I think this is clearly one of the more important acceleration trends. And this is going to result in big changes across many industries, of course. Very importantly, across smaller companies. So companies that have traditionally been very physical, like restaurants and small retailers, have really accelerated the change online. Beyond that, I think it makes us all very conscious of the global trends. So at a much higher level, climate change, like the virus, affects all of us. And if we don't all change together, it's not going to work. So I think this is the other realization. On the one hand, very much an inward looking, what happens in our community. At the other, what is happening to me in my health, in, again, trends like climate change are important to the rest of the world. And so I think these are some of the things that we'll be seeing. And of course, this is going to have a big impact on our economies and how we live and how society is governed. I think we need to make a big reflection, and I hope that we will do this together, private and public sector, about how this new world needs to be governed, from taxes to regulation to competition rules, because we are going to be deep into the digital economy, and we need to, change the way we operate.
Ray, your thoughts, the most lasting effects of the pandemic? I can't hear Ray. It appears we may have lost Ray's mic. Ray, if you can hear me, Ray, perhaps turn your mic back on the screen. We may have. I'll tell you what. While you work on that, Ray, let me turn this question to Ann Richards. Anna just gave us her sense of how things are going to change over the long run because of the pandemic. What do you think?
So I totally agree with what Anna said. I think there's three things that have meaningfully changed in the last 9 months. And the first is around the general macro environment. I mean, the situation that we have been in with the incredibly rapid monetary policy shift that we saw in March, April, the speed of the central banks, the extent to which, frankly, indebtedness has just, as a way of navigating through the trough, if you like, indebtedness has risen up. That debt burden is going to be with us for a very long time to come. And how we deal with that debt burden and the effects of that debt burden are going to absolutely drive, and the choices that we make around that debt burden are going to drive, I think, the next decade in terms of what the path of the economy is going to be. So I think that's the first thing, which is a really lasting change. I think the second is around the conversation around sustainable capitalism. And Anna touched on this. She talked about the climate. She talked about a new kind of governance model, if you like. I think it's really interesting that business is probably ahead of government and policymakers now on the issue of sustainable capitalism, perhaps because they've had a near-death experience. And perhaps because we've all looked into the abyss and suddenly realized that shocks, which might seem tail events, actually really can happen, like a pandemic. And maybe it's brought the reality of climate change a little closer to home on that. So I think that this business-led approach to sustainable capitalism is a real driver, and that's not going anywhere soon. And then the third thing, and I suspect that a lot of people watching this will understand what I'm saying, is that we've learned that the radical, that the unexpected, that the really innovative can be done far, far faster than any of us ever thought was possible. When we looked at rolling out Zoom, for example, across the business, we did it in more than 25 countries in less than 2 weeks. Now, as a normal project, that would have taken us probably 8 months in the normal way that you would do it. And yet, because we were put in a position that we had to do it, we did it with remarkable rapidity and actually with almost no problems or consequences in the way that we did it. So I think it's shown us that when we really need to, we can be much more radical and we can move much more quickly. So I think those are three of the things that have meaningfully changed as a result of everything that we've seen in 2020, and the effects will be long lasting.
Ray, we've heard from both Anne and Anna about this idea that the shock of the pandemic has awoken the world to the need for a more sustainable version of capitalism. This is something that you touched on well before the pandemic. I want to hear your thoughts on that point, and also more broadly, what kinds of long-lasting effects you think the pandemic will have.
I think that there were vulnerabilities that existed under the system, and the COVID is a stress test, and it'll go away. But there'll be some things that are broken for a long time, and then there's some things that are profoundly changed. I think, first of all, the financial gaps between entities is clear. The rich, the poor, those who have good income statements and good balance sheets, and those has been a defining characteristics. Some of those will be broken, and it has enormous political consequences. The left and the right will be, I think, in greater conflict. And so that issue has also been connected to the changes in money and credit that Anne was referring to. In other words, before that, interest rates hit zero, and there was not classic monetary policy. And also when there was QE, it didn't pass through to those who needed the money the most. What we now had was we're in a new era in which there's going to be government borrowing money and directing that money more than the normal capital markets, and central banks buying money. And that is going to have a profound impact on the value of money, probably reserve currencies and so on. And then related to that is it's a defining moment in terms of the strong and the weak, which, for example, China has come out of this very well, and it's going to change the nature of capital flows, I think. So I think that those are the main. It'll have political and wealth implications that will be very important and will be clarified over the next, I think, 2 years.
All three of you have touched on the macro impact of the pandemic, and I'm delighted about that because I want to delve into that more deeply. But before we go there, I'm curious. Every company has been forced to adapt over the past 9, 10, 11 months, and many CEOs are pleasantly surprised by the results of that adaptation. Briefly from each of you, I'd like to know, what one change have you made because of the pandemic that will become a permanent part of the way that you do business? Anne?
Well, I suppose the most significant is that we've realized that we don't need people to be in the office all day, every day. And so we're moving to rolling out, we call it dynamic working, but we're moving to rolling out a much more flexible approach to who comes into the office, when they come into the office, what they come into the office to do. And we've learned that actually we can focus on the output rather than the input and get really, really good results. I mean, in some instances, we've seen operating data actually improve through this, which is just not what you would expect. So I think that's what I would highlight from us. It's the flexibility which we have. Where and when and why do we come to work?
Ray, how about you at Bridgewater? Any one thing that you've done differently as a result that you think is going to stick?
Well, we do have the locations and the digital part of it, but I think I'm a global macro investor, all of the liquid markets in the world, basically. And to use this as an opportunity to about differentiation and diversification of our portfolios to make sure that those kinds of surprises and those kinds of differentiations are reflected in our portfolios.
And Anna, quickly from you as well, one thing that Santander is doing differently now that will stay, that will become a permanent part of the way it does business?
So it's a very important change in the way we managed the pandemic. We didn't have somebody to manage a health crisis, which has a huge impact on our business, which extends horizontally across the company from health to employee safety, technology, customers, public policy. So we organized in a different way. I appointed a business leader to be the head of COVID. He still is. He's the head of our wealth management division. And he created a very specialized group across the whole world. And I think this is a huge lesson and something we're going to repeat and do again. I.e., we don't need to be just organized the same way all the time. We can have a much more flexible, way of getting things done, much more effective. And this, I'm sure for many companies that are startups and smaller, is maybe what they do already. For us, it's been an eye-opener that we can manage the business in a different way and do it very effectively. Within 15 days, we had 130,000 people from Brazil to Poland to the US working from home. We were able to help communities to source health materials, and all of that with a very different organization from what is usual for us. So this is very important for us as a company.
The title of our panel posits, not unreasonably, I would say, that we've entered a new world order. And Anne, you already touched on it with debt burdens. Anna, you spoke about it in terms of the awareness of climate change and how there are similarities between that and the pandemic. And Ray, of course, you talked about how governments are going to have to finance themselves. I'd like to quote my colleagues, Tom Orlik and Bjorn van Rooij, because this is how they put this idea of a new order last week. They said, the center of economic gravity is shifting from west to east, from advanced economies to emerging markets, from free markets to state controls, and from established democracies to authoritarian and populist rulers. I want to know from all three of you what you think the new order will be. Are Tom and Bjorn right, or will things play out differently? Ray, this is your wheelhouse. As you look out into the next 5 years, maybe beyond that, give me your macro framework.
I think that this is a good summary. I think when I look at history, I've studied the rise and decline of reserve currencies over the last 500 years. And this is a moment of a change in the world order, very similar to that which happened prior to World War I, prior to World War II, an analogous period. There's large wealth gaps and income gaps and opportunity gaps that exist. There's no time that has been this large since the 1930s. At the same time, monetary and policy and debt policies in which when you have a zero interest rate, there needs to be the expansion of debt and that monetization of debt. That last time that happened like this to this grade was 1930 to 45 period. And the rising power of China, challenging an existing power in its competitions. The last time that existed was in the 1930s to 45 period. There are struggles, fights over wealth and political power within countries and then between countries. That confrontation, that issue about how to deal with that whether it's in a peaceful way or in a confrontational way, within countries, like our political divide and our social divide that exists in the United States and in many countries, or between countries, such as the conflicts that exist between the United States world order and the Chinese rise, in which there's conflicts. There's a trade war, a technology war, a geopolitical war, and even a capital war now, and then there's military conflict. We, I believe, are coming into a more challenging environment because of the nature of how this happens over and over again through history in these cycles. So I believe that your summary at the beginning was apt.
And do you share Ray's view? Growing divide, more confrontation, a more challenging environment. Do you see things differently?
So look, I think that is a completely credible path and a completely credible set of, it is one route that we unquestionably could go down. But I think it's also worth focusing on where are the points of shared interest, where are the points of commonality. You know, China in itself has more than 1 billion people with 1 billion different views of what their future should look like, just like America, just like Europe. Everybody has their own view of where they expect to share and what share they feel they ought to get in a size of the pie. But if we can increase the size of the pie, it is better for everybody. So I think it is more constructive, and this is where I hope that we will get to focus on where there are common interests and get back to a more multilateral approach to trying to solve those interests. And you know, climate change is dealing with the climate, dealing with the environment. That's an absolutely classic place where actually humanity has a shared interest, regardless of which side of the Pacific or which side of the Atlantic you're on. And yet we lost a little bit of that shared goal. So I think the opportunity for us now is to focus on where there is a common ground, where there is a common interest. But will be all too easy for us to slip into the scenario that Ray outlined, which is to focus on the differences. And I think that would be a really regressive step.
I want to so agree with Anne and say that I think that this is a defining moment of how we're going to be with each other, internally within countries and externally. But we're still going to have to face the problems of how do you create money and credit and how do you get it into the hands of those people who need it most. So I think that the summary is completely right, and I hope that we follow that better direction.
So, Anna, your thoughts on this idea of a macro framework as you look out into the future and you're making decisions about how to run your company, what are you anticipating?
So, I mean, Ray and Anne have, I think, said it all, and I agree with everything. I think the key is, how do we manage the distributional impact of this crisis? I think that is the key, and it's true for regions, countries, sectors, and people. Because other than that, the structural trends we're seeing are the same as pre-pandemic. They're just accelerating and have accelerated at an exponential pace. So how do we deal with those most affected by the pandemic? Because this is really going to make things worse than they were before. The differences that have been alluded to. Monetary policy obviously benefits those that already have financial assets. So I go back to, we do need, I call it a new social contract. What is the new governance of governments and the world? And the key here is that we put fairness and a focus on adaptation and social resilience at the heart, because the economic terms have to be based on fair competition, fair taxation, and distribution efficiency. We need to really together build a more inclusive and sustainable recovery, the building back better idea that has been said many times. And I really believe we need to get public and private sector together. I mean, governments have done the best they could, but in most cases, they were not ready. They didn't have the governance, the leadership to actually deal with this in the same way we did. We've heard from Anne and other companies. We put together teams in 2 weeks. We had leadership where we didn't have it before. We had a plan, we executed. So as we think about the new world, and it is a new world that we are already in, working together, private and public sector, is key. Otherwise, we're going to go down a very bumpy road. And I think there is a real risk of that happening because the digital economy is a very different world from what we had before, and it's accelerated. So again, putting fairness, social resilience at the heart, collaboration, to me, those are the key concepts as we build this new world.
Let me stay with you, Anna, because I'd like to understand a bit more about how you adapt to that environment that you and Ray and Anne have articulated. Santander has a big footprint, a big geographic footprint. If my colleagues Tom and Bjorn are right, and there's a pivot from developed markets to emerging markets, is that something that you chase? You don't have to chase it very hard because you're already in emerging markets, but I'm curious to know what kind of strategic impact or strategic adaptation you make to adjust to this new reality.
So look, I'm actually just back from my first trip since February to the United States. I was in Boston, New York, and I was in Brazil, in Sao Paulo. Santander today, 40% of our earnings come from Latin America, with only 13% of our loans. There's a huge potential for growth in the areas of emerging markets that we know well, and we have great talent. So we are going to adapt our strategy, and we announced this a few months ago. We are working along three lines. One is what we call the One Santander. We need to become much more efficient, especially in Europe. We need to manage as one entity, not 4 or 5 or 10 different countries. The second is around payments. We're building, again, we've been doing this for 4 or 5 years, but we're going to bring it all together. We just announced the acquisition of the Wirecard assets in Germany this morning or last night. We're going to build around GetNet, a Brazilian company, which is one of the leaders in payments. And we're going to build around Open Bank, which is a fully native digital bank, and our consumer business in Europe. So what we're going to do is what our consumers, our customers are asking. They want to deal with us more online. I said it before, 50% across the group of all the products we sell in the month of October was sold online. So we need to rethink how we service consumers and how we also organize ourselves, taking the lessons we've learned during the pandemic. And this is true for all companies in all sectors.
And how about you, adapting to the new world order? Other companies in your industry have chosen to go down the consolidation route. And that may not be exclusively because of the pandemic. There are all kinds of other factors, let's say, or variables involved in that equation. But is that how you adapt, or do you adapt differently?
I mean, we've been a company. I mean, we've made acquisitions from time to time, but our growth has largely been organic, and I doubt very much that will change. We see bolt-ons that we can bring into the business, but for us, the core of our investment proposition has very much been driven off of our own research base. And I think that is going to continue to be the case. I mean, we've actually had, in terms of flows and in terms of business performance, we've had a great year this year, which is not where we necessarily expected to be back in March. So we see that there is consolidation going around about us, consolidation in the asset management industry. You know, it's tough to get right. You can get it right, but it more go wrong than go right. So I think we prefer to stay on our own, with our own strategy, and build that out organically and with patience, which is what we've always done. But we are lucky in that we have a very broad international footprint. We are present in, as I said, more than 25 countries around the world. So for us, the imperative and the need to fill in some of the gaps is maybe less strong than others in the industry, and we're happy to continue on our organic route.
Anna, same question to you. There's more consolidation in banking than we've seen in some time. What's driving it? Will it continue? Will Santander participate? Is that part of your adaptation strategy?
So we're much more likely to continue buying technology platforms or add-on acquisitions. We did eBury, a fintech in London last year. Actually, we closed this year. We're investing in startups in Brazil across our footprint. We serve today 145 million customers worldwide, more than any bank in the Western Hemisphere. So this has huge potential for very significant organic value creation. And our vision is to be the best open financial services platform on the market. And what we want to make sure is that the structural changes that we have made, I described before, which is the One Santander, the global digital bank, and our payments platform, will help us drive greater and profitable, sustainable growth. So no, we're not about to participate in any, let's say, traditional bank consolidation. We don't believe that is the right thing for us at the moment.
Now, Ray, you touched on this idea of adaptation before. You talked about the need to diversify. You were speaking about the investments, I presume, that Bridgewater is making. Could you give us a little more on that idea? How does Bridgewater adapt to the new world order that you've been thinking about for a long time, I should add? Anybody who is familiar with your writing and your speaking knows that. So I presume that some of the things that you're doing have been in the works for a little while, but nevertheless, here we are, in November 2020, and it's a different place than we were 11 months ago.
To answer your question, there's a business answer to the question, how do we operate business-wise and also portfolio? I'd like to emphasize the portfolio because I think that's probably most relevant to other people. There's a period of, I think, great uncertainty and great risk. And so I think there are three words: diversification, um, liquidity, and then differentiation. Um, we want to make sure that our investors are not just concentrated in some of the traditional markets. So diversification of how to do that well can reduce risk without reducing opportunity, and that means currency diversification, including the reserve currencies. How much exposure is to the reserve currencies? But it means currency diversification, asset class diversification, country diversification, and that should be the starting point of portfolios. In terms of liquidity, it allows you the flexibility to change as circumstances change. And differentiation is the most important consideration now. There are two different worlds. There are worlds that will be orderly and will prosper in this kind of an environment, and you could see it. And that differentiation versus other worlds and markets related to that, that will be bankrupt and disorderly. That kind of differentiation is important. As far as the business goes, we have the different location considerations and long relationships that we're building on.
Ray, I'm going to ask you to continue because you just said something that at the very least interested me, this idea of bankruptcy and disorderliness. Where do you see that?
Well, you could see it. It's reflected in the income statements and balance sheet. Every individual, every company, every country they're good. How well they are depends on how much their income is relative to their expenses and how much their assets are relative to their liabilities. So you can see radical differences in the financial consequences of that. Second, the ability, the proximity to those who are printing and distributing money. Are you a recipient of that? For example, a lot of the third world is not a recipient of that and is not in good financial situations. And then there's order, political and also social order. So when you could see it differentiated in the countries that are controlling the virus and behaving orderly and well together. So you could see those differentiations reflected in the market's behavior, and you can also see it reflected in the political and social conditions.
Well, we know that markets are discounting mechanisms, Ray. I don't need to tell you interest rates at zero, but I'll remind everybody that stocks keep rising to new records, and not just here in the United States, but globally. PE ratios haven't been this high since the dot-com era. The dollar, to your point about currencies, Ray, has slumped to a 2.5-year low. Do asset prices and valuations make sense given the economic fundamentals, some of which we've talked about here in this panel discussion, and for that matter, the policy outlook and what we can expect from a Biden administration? Ray, what do you think?
When we look at interest rate markets, we look at the earnings yield. When we look at stocks, and we look at PEs, they're basically yields. And the capacity of central banks to print money and buy financial assets has essentially led the bond market to go to multiples that are somewhere between 100 times. You put a dollar out and you'll get your money back in 100 years. It's because of the nature of, so it's as 100-time multiple. You have to compare stock multiples to bond multiples. And so the capacity of central banks to put liquidity into the system and to have that liquidity go to produce high multiples is very real. It also changes the economics of borrowing. In other words, if you can find something that makes anything more than a zero, or they're going to make money. So that encourages the leveraging and the changes. So the financial flows that we're seeing, the market behavior is reflective of that. In my opinion, don't own bonds and don't own cash because they're producing a lot of debt and producing a lot of money to fund it. And so that's changing the nature of capital flows. It's also changing how those flows go to China in terms of the comparison of that market, particularly as it opens up. So I think it's behaving sensibly, but don't use old multiples as reflections of the limitations of what's expensive.
Ann Richards, does that make sense to you? Throw out the old orthodoxy. The fact that we have zero interest rates is changing the way that you need to think about multiples and valuations on assets?
Of course it does. We've never been in a situation where, for this length of time, we have had effectively free money, or you know, it's completely shifted the relative valuation of assets and how you come up to an establishment of what a fair asset is. And I think when you look at the level of indebtedness that we've talked about, this ability to use the central bank balance sheet as a massive buffer to manipulate the price of that money, that experiment has taken us into far further reaches than we ever, and arguably successfully in many respects, than you ever imagined was possible. But there are consequences. The gaps that Ray mentioned earlier about, you know, the fairness gaps. And by the way, I would add one that he didn't mention, which is it's been very easy for large companies to re-equitize themselves. It's been much tougher for small companies to do the same thing. They have been left with proportionately higher levels of indebtedness. And I think that is a potential problem for the recovery, which we need to address. But essentially, when you've got this level of indebtedness, you've got a number of choices. You can grow your way out of it, you can inflate your way out of it, or you can default your way out of it. And there are choices in which route you follow down that. And this is where I think we come put all the way back to sustainable capitalism, because if we want to be successful and avoid the disorderly disintegration of bond markets, we have to think about how we use this free money to invest in job creation, in productive capacity, useful productivity improvements, which ultimately get us on to a positive path for the economy as a whole. And this is a choice. If we waste this opportunity, if we waste the free money, if it only goes into financial asset inflation, then we will have a very large reckoning down the line. So again, I think there is a choice to be had here, and we really hope we make the right choice here.
And there's going to be a new president in the White House on January the 20th. Does anything of what you've said, or perhaps what Ray sketched out as well, because you're broadly in agreement on many of those points, change under a Biden administration?
I think you will see an increased willingness to engage in a multilateral basis, which I think will be helpful in some of the issues that we're talking about. And I think the likelihood of a split Congress means that perhaps some of the more radical and larger fiscal packages which were talked about are perhaps a little less likely than we were. So I think that multilateral approach will be the single biggest change that we see, and perhaps the tone, obviously, of some of the communications. And I think we may see some interesting conversations around large tech and just what the roles and responsibilities of large tech are. They've been part of the solution this year, but also I think there is a sense that that concentration of power gives them great leverage. And maybe we need to think about a better framework and a better multilateral framework for them to operate within.
Anna, quickly from you, zero interest rates may have been a boon to stock market investors. They're not the world's greatest things for bankers. Tell me how you're adapting to that reality, and maybe touch on a little bit of what Ann spoke to in terms of what changes we might look toward in the global dynamic under a Biden presidency.
Sure. Well, I think the first thing is that as far as not just Biden presidency, I think this is the case for Europe and countries that actually can do this, is that we should not withdraw support prematurely. It's like, closing your checkbook during a war or something like this. So we need to continue with government support for the small and medium-sized companies and those that have lost jobs and so on. So this is super important. In terms of the U.S., I think the U.S., like the world, has a complex situation, and I think we need to come together and work together to grow out of this in the right way. And this is really the main task all of us in the private and public sectors have ahead of us. For banks in particular, the low interest rate environment obviously is not ideal, but I think it's also a huge opportunity to change and reinvent ourselves like we are doing. Ray mentioned something hugely important, how efficient you are. We continue to have a 47% cost income. This is the best defense: growth, growing the top line, and being very efficient. Same thing for governments, and do that in a sustainable way.
Anna, Anne, Ray, I'd like to thank all three of you. Great conversation and great to see all of you.